Hello and welcome everyone to the weekly Delphian meeting. Thank you for attending. We still got people joining in here, so maybe a little disjointed as I allow them in. Anyway, the plan for today, we'll go through the market update and then we're going to dive into the Q3 2021 earnings plan. So, Shawn and I have been working on this past week. We have quite a few changes involved with the earnings plan based off of analysis and things that we've done. So we'll get right to the market update and then we'll go through the earnings plan. Okay, so from last week, we were up around 46 on the state ones, and you can see we dropped about 10%. That 45 is historically a good, like, overbought level. Overall, obviously the green pies slipped down and kind of did exactly what we had talked about last week, getting down near the 50-day SMA. So let's look at market pulse here. We've had some pretty good spikes on the transitions, good turnover. I don't know if we'll get below that, like a new low here at 35. I think we're at 36, 37 right now. So we've had pretty much like a reversal from last week. Just things, we kind of called this top and it's been meandering down. Markets followed down. So, we'll just have to wait and see. I think, our big key indicator is really the 50-day, and we got near that. But, as far as market pulse looks like, I'd kind of watch, I don't think, doesn't seem like we're going to, turn over, it just keeps bouncing on to 50-day SMA, but we can continue to watch this. We did have an uptick in state aid, so a little concerning. Not a big anything going on with the new lows. Obviously, it moved up a little bit here. So if we see any follow through, I think that would be something to be concerned about. But it kind of looks like a normal drop at this point. How it's been doing that over time. So that's kind of the gut feeling I have right now. Just like another test of the 50, and we can see how things obviously watch these indicators as we go. So SPX, nothing, still off in la la land, well above target 3. So really what we want to look at is the sorry, I need some. This 50-day SMA. So yesterday we were pretty close. Looks like the low was 35, and let's just call the 50-day SMA 30. So once again, I'd call that a test. One thing I did see that's very strange. If you look at the date here, May 19th, and you go up here, and June 18th, and July 19th, August 19th. Very strange. I haven't seen anything like that before. So if that's any indication, the low of the market will probably be on Friday, based off of this weird, every month. Just very strange. So I kind of caught that this morning. I was just like, what is that? So, so obviously this is the key thing we're going to watch, this 50-day SMA, kind of, get below and hold below. That would be something very bearish overall for the market. But, if as long as this holds, the rally continues. So we're, right around there. I think today we're up a little bit. Actually up more than we thought. It was kind of low at the start, but So, that's what we really want to watch. Let's look at the Russell. Okay, so Russell went in state one. We had a nice little pop and then just, went all the way down basically to support. So this level down here, this is where you can get bounces, the support down here. So obviously when you come into state one, you have this, the entry is your pretty strong support. And then, down below, this is your like second level support. So being on this, the Russell being here and then, SPX being basically on that 50-day support, those two things kind of line up for like, okay, they're both on support. So typically you'll see a bounce, things lining like that up on support. But we'll wait and see, but I would guess that, both those things are pointing to a bounce as far as the market, another little run up. So, but, long term, obviously we talked about this a lot. We're still in this channel down here for the Russell. Pardon my non-straight lines. It's hard to do this on the mouse. But basically, we've been in here since, February, kind of started that. So, until we break one way out of here or another, I think that will give us the market direction long term. But until then, this thing's just, still channeling, which is, kind of strange. The other two are making new highs, NASDAQ and SPX. So that was a quick market update. Obviously, focus on that 50-day SMA. That's the key thing. And then, you can watch the Russell here, see if it, bounced off that support area. So any questions, comments?
Hey, Josh, it's Lee.
Hey, Lee.
Hey, when you were showing us the channel that the Russell's trading in,
yeah.
Is it my imagination or have I mixed things up? Have you mentioned in the past that in a situation like that, a bull call would be or I'm trying to figure out what's a good trade when you're in a channel like that? What do you like?
Well, I mean, if it's on, so you have a couple of things you can do. You can do like non-directional trades, basically like a butterfly. If it's not that wide, you can do the wings out here, and, basically like, you do like a month or two, like 2 months out or something. And your wings are these, basically the highs and lows. And basically, you're selling at the money with the double there. The other thing, like once it gets up near kind of the top end, you can play it, as kind of down sideways type movement. So like, like up here, you could do like a bear call, right here, a bear call, or, you can, if it gets down near, the support level down here, then you could do like a bullish type thing, but obviously you don't want to do like calls and puts. I would think you want to do like spreads where you're collecting, like premium type things. And then obviously this non-directional, that like the iron butterfly type thing, that's another thing you could do for those type of trades. So
all right, thank you.
Okay, any other questions, comments?
This is Dave. Just to comment on Lee's question there, when you're kind of range bound like that and you're at low implied volatility levels, it's lots of times a good setup for calendar trades as well. And you can play them bullish or bearish or neutral, depending upon where you pick the strike. So as a matter of fact, I've been doing more and more of them right this this time period, because September is usually a flat kind of time period, and the fourth quarter is looming where there's usually lots of optimism. So it was interesting watching, just as a side note, that happened to Apple on their new product release day, which was yesterday. And and we're leading into, the time period where people think about the earnings play to, get involved before the earnings date, kind of a scenario that we've talked about a number of times. So that's another interesting way to play calendars while you're in the flat period. Specifically with the Russell, I would almost comment, if you looked at the Russell when it was going up, it was like right at the period of time where the election happened, and there was the green dream kind of thing from the Democrats. And then nothing happened with the infrastructure bill for all the time that you see it going flat. I would say if you can predict when the infrastructure bill might get passed, might be a catalyst for the Russell to maybe take a leg up and break out of the flat trend there. Just those are the kinds of things that I've been watching and kind of waiting to happen, although I'm not very good at predicting when politics, when they actually pass bills or don't. It's been all the time that you see it going flat is there's nothing been passed. So, and the Russell has quite a big collection of U.S. companies in it. So I think that's the one that might benefit the most from actually a bill that tries to get new jobs going. Just my comment on Russell's question there.
Hey, Dave, so you're doing it on like the Russell or the Spire or the SPX or something like that. You're not choosing a stock per se, right?
Not, I would say no, but I'm doing kind of both. If you think about it, there are certain stocks in the Russell that are infrastructure related, so I'm actually playing those separately. But I also have a IWM, index play that's just buying volatility when it's low. And it was really interesting to see Josh's perspective on the SPX and the every month, kind of dip. This is probably a buy the dip opportunity for those that have been playing that. That looks like it's holding up. The Fed decision is not going to be hurried along for reducing their balance sheet by tapering with the last jobs report that came out, and the last consumer price report that just came out that looked like that inflation might be more transitory, like the Fed is thinking. So I don't think the Fed's going to move pretty quick or very quick. So what's to change the current trading sentiment? Not a whole lot, in my opinion. So I buy the dip might be a good way to go with SPX after Friday. Like Josh said, that was really eye-opening, Josh. Thanks for bringing that up.
Yeah, it was pretty crazy when I saw it. I was like, I've never seen something like that. So, and I think buy the dip means, spreads. We're not talking like roaring higher. We're just saying not lower. So, that's like the kind of spread type strategy you want to do, I think. Thanks, Dave. Okay, anyone else? I think Dave brings it up. I mean, you always have to focus on what the Fed's saying. They control the markets. So, any rate raising, tapering to a point, I think those two things could drive the market lower when they do come about. So till then, the stimulus, more bills, more spending, the bonanza continues. So, okay. All right, we'll move on. to earnings plan. I gotta mute a few people here. Yeah.
Josh, can you hear me?
Yeah. Hey, Sabir.
There's one thing I just got logged in, so there's one thing I wanted to mention about the S&P. You brought up that every month it's going down, getting close to its 50-month SMA.
Yeah.
And one of the things I've been reading is that that seems to have to do with options expiration. That consistent drop over the last few months has been real close to options expiration.
Mm-hmm.
And because of the increase in options volume, the market makers have to do some hedging activity, and then they unwind that activity. I don't really understand the mechanics of it totally, but then they have to unwind that activity, and Joe probably can explain it better than me. And that's causing this consistent drop, particularly like in the quarterly option expiration, like June and September, and where we're at now.
Yeah. That's interesting. Yeah, I don't know if Joe had a comment. Yeah, we also have Mark on there. He used to be a market maker. He may have insights.
Yeah, hi, Shadir. This is Joe. I've always, I mean, you know, there's always been this opinion that, you know, the expirations tend to drive certain assets to strike prices. I've always personally been a little skeptical of this. You know, the drive down here, you know, might, and, you know, on the one hand, if the market makers are long gamma, then they have to, you know, buy and sell the underlying very rapidly to offset the cost of that gamma. But I think, I mean, my take is that many pros are short gamma, you know, net collectors day in, day out. And if you're short gamma, you know, you've got to hedge as the market goes against you. So I just personally, I've never been a big believer that expiration, you know, drives underlyings to strikes. One thing I can say, you know, about the size of the market, it unquestionably has grown. I mean, you know, just big picture numbers, the industry did about 5 billion contracts in 2019. In 2020, the industry, you know, went up damn near 50% at about 7.5 billion contracts. We're already at 6.5 billion this year. And open interest, of course, has grown significantly. I mean, we used to be in the 300 to 350 million contract open interest area. We're up about, I looked yesterday actually, about 475 million contracts of open interest. So, you know, the size of the pie definitely is growing. I just personally have always been a skeptic about, you know, open interest, especially market maker open interest, driving underlyings to a specific strike. But that's just my own opinion.
Interesting. But you do agree that the volume's gone up. That was the gist of what I've been reading, is that, you know, there was always hedging activity by the market makers, but the overall amount of options activity, let's say 10 years ago, that hedging activity was not enough to influence the direction of the market. And now what I'm reading is that because the option volumes have gone up so much, as you point out, that now it is enough to influence the market, unless, of course, there is some, you know, other event like I think Dave was saying, passing the infrastructure bill or something like that. But so I don't know. I'm not a market maker. I don't live in that world, but it does seem like every month, right near options expiration, Josh is showing it. These drops are right near options expiration. And we're 2 days from the quarterly option.
Yeah, I have this is
Yeah.
Dave. A question for Joe on his comments there on this is being a quadruple witching Friday. This Friday, not only is it a monthly, it's a quarterly, as Sadir pointed out. From the market maker's perspective, well, actually from the options trader's perspective, do you see a higher, or would you see a higher gamma risk scenario or risk to gamma this particular Friday, with everything expiring on Friday, the quarterlies, the monthlies, the weeklies, and sometimes the every other dailies when it comes to the SPX, all on this Friday? Seems like
Dave, I never did any homework on that. You know, common sense would suggest that, yeah, you would think you get a little more volatility, but I never honestly did any real work on it.
okay, thanks. That was the question. Thanks.
And just back to Sadir real quick. You know, Sadir, going back 10 years ago, there's just no comparison, you know, with regards to options volume. But I can tell you, you had the same conversations 10 years ago about, you know, even though it was a considerably smaller universe, open interest in options influencing the direction of underlyings at expiration. So it's kind of an age-old conversation.
Interesting.
And you know, back to you, Josh, because I know you know, you guys got the big earnings plan to release here. So
Yeah, good discussion. So, you know, thanks everyone for the input. So let's get moving here on earnings plan. Okay, so it's out. We have a total of 125 trades, 111 different symbols. I need to share this with everyone. So you should do it right now. Takes a minute. So you should receive an email once this comes. While that's going, you know, we do have the share drive. So I updated the Q3 for everything, the plan. I left in that summary for studies and that state 2 target 3, but everything else is, you know, the Excel spreadsheets that we do for each of the different strategies. So once Shawn gets talking, I'll send that link in the chat here so you guys can access it. It's in the email that I send out each week after, you know, I upload the recorded meeting. So everyone should get it now. If you don't get it, please let me know. And from there, so we'll go through the various strategies. So I think Shawn's gonna cover the pre-runners, and then I'm gonna do the vol rise and mover, and then he's gonna take the rest, the vol crush, non-mover, and the runners. So overall, yeah, we changed these to spreads, and Shawn will go through all that. So I'll hand it off to you, Shawn, if you're ready.
Yeah, I'm ready. How you doing? You can hear me, I guess.
Yep.
All right, good. Yeah, and so just to confirm, Josh, let me share my screen. Just to confirm, Josh, when you share that with the group, that earnings plan, they do not have to click on that daily alert button. I don't even think it's there anymore,
No.
right? Like there's no daily alert. So once Josh shares the plan with you, it'll automatically come into your system as a pre-alert. So you'll get the pre-alert email and that Sunday email as well. So all of those should automatically just generate for you. So if you're missing them or something doesn't seem to be, you know, working properly, please let us know so we can make sure that, you know, you're on the list or just where the connection might be lost. So, so yeah, like Josh mentioned, I use this, you know, this earnings share drive all the time. You know, I come in here to look at the files. I also do open the files up here and save them to my desktop, and then, you know, can manipulate the files that way. You know, whatever's going to make it easier for me to kind of follow the plan or look at some of these trades. So, you know, you can always do that. The information here is static, so it's not changing when it's on the Google Drive, but when you do save it on your desktop, obviously you can manipulate it any way you see fit. So if you do change some numbers or change things like that, it might not be what we originally put out. So just be careful and cognizant of that. If you do that by accident or on purpose, just make sure you know what you're doing. So I'll run through these. I'll run through a couple, and then if anybody has any questions or anything like that, please let me know. Let me see. I can't see. It's blocking part of my screen as always. Give me 1 second. Sorry. Let's see. I can't see which one that one is. But I got part of the screen. There you go. Okay, so it is a bullish pre-runner. I get part of the Zoom meeting tabs block part of my screen, so I can't see sometimes the information. But like Josh had mentioned, we made some changes to the trade strategies. So, we were using the long calls, long puts, so we've tried to, optimize those strategies a little bit more by using the spreads like we've talked about, and it seemed to help, improve some of the backtesting numbers. So, putting those into action for this new Q3 will be great, because then we'll be able to get some better analysis on live trading of how these spreads are working. So you can always come in here, pull up the bullish pre-runner file. You can see the raw data. So over here to the left, you can see all of the raw data with the trades of what was generated by this bullish pre-runner file that Josh had created. Obviously you can keep going down, and there's hundreds and hundreds of symbols that we have there. But you can also look at the let me see if I can get it over somehow. You can also see by scrolling over, you can see the actual screener that Josh used to come up with the symbol. So the screener is the close 15 days before is going to be greater than 3%, 7 out of the 10 past earnings without using the seasonal. I know we talked about this before, and Sajir mentioned as well using a seasonal, and that's something that we're still looking at. We wanted to make sure we get the plan out prior to doing some additional testing like that. But that's always in the works, and we're looking to see if we can optimize it based on using that seasonality. So you can see the screener there, and then you can also see the strategy that was used for the bullish pre-runners for this particular Q3. So strategy was a bull put entering into the trade, at least, or at most 20 days prior to the earnings. And then the profit target of 50% of your max profit. So in a bull put, as we all know, we're receiving a credit for the trade. So if our credit for putting that trade on is $400, then we're looking to get 50% of the max profit, or 50% of that $400 as our profit. And then our stop loss is 100%, max risk. Now, on these trades too, when you're selling a bull put spread like that, in this instance with 60 days to expiration, and we're only, at most 20 days prior to the earnings announcement, typically, we should not be at a max loss, 100% max loss on this trade come time of the earnings announcement before we should exit this trade. However, it is possible, but typically it's unlikely. But we still put that in there for the back testing purposes. Now you can see on this one too, we're using monthly options, and then you can see the strike selection model down below. So the put that we're selling is going to be one strike below the current price. You can't see it here because it's blocked off, but one strike below the current price. And then you're going to buy the option, which is going to be one strike above the lower standard deviation. And that's what's going to construct that bull put spread for you. And again, the minimum is going to be 60 days to expiration. Some stocks you might find options that don't expire for 90 days. And those are the ones you're going to have to use. Or if you see options that are expiring in 55 days, we wouldn't use those options. We'd be looking to the next option expiration. So just keep those in mind. Doesn't mean that using that 55 days to expiration is bad. I would just say that's something that you would obviously want to make sure you're testing within Delphian to make sure the numbers, that you receive are going to be similar to, the numbers that we have for our Q3 plan. So as you scroll over the tabs, the raw data is here on the first tab. If you scroll over to the next tab, Josh sorted it out to all of the trades that had a win percentage of over 80%. And you can see here, Apple, multiple selections for Apple based on the actual days of when you're going to enter into the trade prior to the earnings announcement. So depending on the day you enter, you're going to get a different win percentage and a different profit factor. And that just goes back to show you that, how valuable that is to have that confirmed earnings date versus an unconfirmed earnings date. If it's confirmed, great. But if it's unconfirmed, and you're trading something 20 days out versus, 10 days out, your profit factor went from not losing a trade at all to a 6.43 or a 90% win rate. So it could change it substantially if it is confirmed or unconfirmed. So, obviously be cognizant of that as well. If we scroll over to the best trades, Josh sorted all of those trades out. So from all the raw data to the win over 80%, he took only the trades that were winning over 90%. They had a profit factor above 8.0. And if there were any conflicts with the bearish pre-runners, he took them out. So we can see all of the trades here. Apple, for example, it shows you entering into the Apple trade 19 days prior to the earnings announcement, and it gives you the win percentage with the results there. Again, column B here is a expected earnings date. Some of them are going to be unconfirmed because we pulled that information recently. So the dates could change from now until November 4th. So if it does, then obviously that's going to change the entry date for it as well. But if it's confirmed in the time that we're supposed to enter it, which would be 19 days before that earnings date. So again, these dates here are static, they won't change. So, but within the platform, those dates will change as we get updates of a confirmed date for earnings. So we can see scrolling down, you can see within this subset of bullish pre-runners, we have 66 trades. So there's 66 trades within the set of bullish pre-runners. And as we've seen in the past, I would say probably, it's been about 30% of those, have come about as unconfirmed when the actual trade becomes valid, but we'll see if that can change a little bit for this upcoming quarter. Any questions on this bullish pre-runner since I have it up? Comments? Go ahead.
Shawn, I got a question.
Yeah.
The ones that are like 100%, okay, have you kind of looked at to see if in fact they were 100% and like the losers you had last time? I mean, we kind of said that we chose the 90%, but we're only getting 60% win. And it seems like a, big discrepancy if we're only choosing 90 and above and overall we're getting 60%. And if some of these are losses from the last one, they're showing up as 100% this time.
Right. No, they should be reflective of how they are. So if we got into this trade, I can pull it up and verify it later and get with you. But yeah, if this Apple trade shows that 19 days is optimal for 100% win rate over the past 10 quarters, then that should be what it is. But, if we wanted to get in there and specifically look at it as a whole, we can do that. It just takes a little bit of time. And you can do that too. What you would have to do is you could go in there and set up a entry and exit date for this particular trade for Apple, and then you could run that back test using the back test functionality in Delphian. If you have one sample that you want me to pull and show you and share some of those numbers with you, I can do that. I can even do the Apple. I won't do it right now to take up everybody's time, but I can definitely do that for you and kind of show you how you would do that.
Shawn, this is Winslow. Did you do this on the 20-minute data or is it still end of day? And then when we get the alert in the morning, we can go and see what the strike prices are on both things, correct?
Correct. Yep. Yeah. So we are still running on the end of day data. I mean, we're hoping to get that intraday data here pretty soon, but I know Resham and the IT team's still working on, optimizing those servers, and Josh and Joe and I have to go in there and verify the data. So a bit of work coming about to do the intraday. So this is still the end of the day data. And you're right, based on, where the stock is opening up at. So let's say Apple is going to be a bullish pre-runner today, or let's say tomorrow morning. You're right, you would see it in the pre-alert. And then you would also see the individual strikes that are selected based on where Apple opened up, and then based on the strike selection model that Josh used here. So the options that would be shown within that pre-alert tab would be options that have at least 60 days to expiration. And then the strike selection model would be based on one strike below the current price and then one strike above the lower standard deviation.
But you're sending that out in the morning, right? So it'll be the end of day, the previous day.
These are coming out. So the backtest data is run off the end of day. And then once that alert is coming about, so that alert would typically be valid for, let's say, tomorrow evening. But what we've done is we've actually made that alert come available to you that morning so we can actually get into it on the day that we're supposed to get into it based on, the trading and the back testing functionality. So when the trade comes out at 9, or actually it comes out at 10 in the morning, Eastern time, they're using those strikes based on the opening price of that stock. So what the IT group is doing is they're pulling that data from Tradier, seeing where Apple opened up at that morning, and where, if Apple had a gap up or a gap down, these strikes that it selects based on that should be reflective of that move on the open. Is that what you're asking?
Yeah. Okay, I see. So at 10 o'clock, we should get an email, and then presumably by 10:15 or 10:30, we can make a trade if everything's fine.
Right. Yeah. Once that email comes out, I believe, I don't know the exact time that they scan Tradier to pull those strikes in, but let's just say it's right at 10 o'clock. If they know Apple is the trade for today, as a bullish pre-runner, it's going to scan where Apple is, let's say at 10 a.m. Eastern time that day, and then it's going to basically pull those strikes based on this strike selection model and where Apple is at 10 a.m. and then send that trade to you, or put that trade in the pre-alerts.
Okay, all right. And then we can look at our own data. All right. Thank you.
Right. And it should be pretty, it should be, it should be pretty close. I mean, if you're looking at it at a little bit of a different time, typically what I do is I'll see where Apple was, at 10 a.m. that morning. And if it's noon, let's say Apple's pretty close to that price, I can, fairly assume that the value of the spread should be pretty close. But if Apple's $5 higher or $5 lower, then I might need to try to make an adjustment and figure out, do I want to adjust my strikes on the trade? Because obviously the strike selection model is a little bit different, right?
Right,
the lower
right.
standard deviation price might be a little different. So I just try to make some adjustments that way. And as always, if you're doing a trade like that, don't get in a hurry. Just try to figure it out and take your time so you're not rushing yourself into a trade that, you weren't supposed to do, or you use the wrong strikes. But yeah, those strikes that come out on that pre-alert should be good to roll.
Good, thank you.
No
Hey,
problem.
Shawn, Dan here. Got a question.
Yeah, Dan.
This list, you went back 10 quarters, you said, which would include the time period where we had the original COVID crash in March.
Yes, sir.
And I'm looking at that period as kind of an anomaly. It's a black swan event, something that I'm just thinking that we should probably call that part out. Because even if we know what the COVID is now, I don't think there's going to be that big panic and that big volatility strike again. So I'm just wondering if we can get more accuracy on the win rate if we took that out. Does that make any sense?
It does, yeah, it does. I think that quarter was strange, to say the least, right? I mean, I think that was one of the quarters where I'd heard some information in New York at a Traders Expo, and I think we'd even talked about it here. Then where it was a bunch of uncertainty, like you say, not only in COVID, but it seemed like the analysts really weren't sure of how to, put all that data within their values of figuring out what a company is going to report for their earnings. So that earnings cycle was, kind of up in the air.
Yeah.
We can always do that. That's definitely something that we can always test. Again, any ideas like that or the other specifically on the stock, I mean, we can always test that within Delphian, and I would, always suggest us to do that. But yeah, we can go back, specific symbols like Apple or, Boyd Gaming, whatever, we can test those individual symbols using those entry exit dates. It's just when you have the different entry days on these, like 20 days or 14 days, that's where you can't do this as a bulk test because they're entering the trades on different days. But if we do have a sample of symbols that all, let's say, get in on the 20th before, we could test that group of symbols, and then we could say, let's not just look at the past 10 quarters, maybe, let's look at the past 12, and then we'll just kind of take out that quarter, that COVID started, of, the first or second quarter of 2020. So we can always do that. It's just, it just takes a little bit of work and a little bit of finessing, but it's not that hard once you get in there and do it. So again, if that's something you're interested in, please let us know, because, I think the more we can show you how to backtest those different nuances within the platform, just the more comfortable you're going to get using it. So it's there.
Yeah.
We just have to take the time to do it.
Okay, wonderful. Thank you.
Yeah, no worries. So yeah, so and back to that point, the earnings plan, and we all know. I mean, I know all you guys know. Everybody on the call knows that these earnings plans, they take a decent amount of work to come up with a plan, come up with the strategies, run the analysis. Josh does a big portion of the work, but any little adjustments like that, like trying to take out certain quarters or analyzing more quarters or analyzing different symbols, that's all stuff that can be done within Delphian. We just have to, again, it just takes a little more time than the process of what we have here. And I know I'm more than happy to help, and I'm sure Josh is too. But if you have ideas like that, that's what's great about Delphian, and that's what's great about this product is we can test those ideas. So, I mean, some we can't. I've had people come to me with different ideas, and I can't test them. But I'm pretty straightforward in saying, hey, I can't figure this out, but let me talk to Ashok and see if we can. And if it's something we can't do, I'll let you know. But a lot of the things you guys are mentioning now, we definitely can do. So that being said, 66 trades on this one. So 66 trades on these bullish pre-runners. Let me go back to the next one here. Again, like I said, I save all these to my desktop. I haven't saved them yet, but I will be saving them. So for the bearish pre-runners, similar setup. Josh set these up a way. You have the different tabs, the raw data tab, and you can see the different filters that he used to run through that data. The screener that he used for the bearish pre-runners, same thing as the bullish pre-runners, just in the reverse, looking for a negative 3% drop. And then you can see we've adjusted this strategy. So before we used the long put strategy, now we're using a bear call strategy. So a bear call is similar to a bull call spread. Bull call spread, you're buying the spread, looking for the stock to go up. Bear call spread is you're actually going to be in a call spread, but you're bearish, so you're wanting the stock to go down. So you're actually selling the call spread first and then looking to buy it back later at a cheaper price. So the strategy is a bear call, enter the trade 20 days before, again, 50% profit of your max profit. Again, we're collecting a credit for the trade, so we're looking to get 50% of that credit that we're receiving, 100% stop loss, 60 days to expiration, and a similar setup as that put spread. We're going to basically sell one call, one strike above the current market price, and then we're going to buy the one call, one strike below the upper standard deviation. So same as the bull put spread, but we're just flipping it and doing the reverse, or just flipping it to the upside, if you will. So again, we can see all the trades that were selected here, and to some of the points earlier that I wanted to mention too. We're using a different strategy. So using a different strategy like a long call or a long put, and then using the bull put spread or the bear call spread, using a different strategy, you're going to get potentially different results on your back test. So a trade that might not have worked on a long call strategy, since you're buying a call out of the money, it might work on a bull put spread because you're using a completely different trade setup. So, take that into account too when we're looking at some of these numbers here. That could affect that. That could affect that win percentage when, even though you're trading Apple, the same stock, different strategy might work better than the other. So that's where I think being nimble with what we're doing and, coming up with some of these different strategies designs, might benefit us and show some fruitful returns in the future. So we can see all the data here again, tons of numbers here that Josh had spit out depending on the days to enter. Win over 80%. Again, he just pulled out all the ones that had a win percentage over 80, and then he came up with the best trades. So once he came up with the best trades, he did a win over 90%, profit factor over 8, and then again, if it conflicted with the bullish pre-runners, he got them out of there. So we can see here only 7 trades. So 7 trades show up for this bearish pre-runner. And again, we're using that different trade setup. We're using that bear call spread. So any questions on that?
I like it. I appreciate you guys doing this. I think I'm anxious to try it. I think I mentioned on the call that I proved to myself during the last earnings plan where I just did spreads instead of the long calls and long puts. And of course, I didn't make this. I kind of just made the spreads ad hoc in my own method without any further study. But my results with spreads, which I shared with you, were significantly better than straight long calls and long puts, right? And so I think
Right.
this will be good.
Yeah, I think it's going to be good, and like you mentioned, we're able to use the platform to be able to run this analysis, and I think unfortunately some of us have learned it, maybe the hard way, if you will, right, by buying those straight options and kind of seeing some of these values deplete over the past quarters. But being able to use Delphian to run the analysis and use these different trading strategies, I think is key. It helps you learn, by analysis, right, and by using the platform, and hopefully not putting a lot of the real money to work to try to figure this out. But that's what we're trying to do, is seeing if we can use the platform to optimize these results and hopefully make some better trades. So yeah, I'll let Josh take over for a couple. I think, Josh, are you ready to show those two?
Yep, I'm ready, dude.
Oh, all right, cool. And then,
Shawn,
and then I'll come back and
one
Yeah,
question. Do you have the list
course.
of the stocks that were losers from the last quarter, so we could just look at and see, why they were losers?
Yeah, I do. I have all those virtual portfolios downloaded. So I think there was only like one or two more trades that I had to make sure I upload in them. And I just wanted to put them all in there as one complete file. But yeah, I'll have all of the trades in there from the virtual portfolio. So all of the Q2 2021 trades I loaded into the virtual portfolio and traded them based on the end of day data like that. And I just exported those files into Excel. So I'll be able to share all those, and you can see. And I did a lot of that too. I tried to take a lot of the trades that I traded within the virtual portfolio and match them up with the new symbols that we have for this quarter and see, were they winners or were they losers, or how they reacted. But yeah, you'll be able to explore all that. I'll have those uploaded. Hopefully I can get those in there by Monday, and you'll be able to check all those trades out within the within the shared file as well.
All right, very good. Thank you.
No problem. All right, Josh, I'll give it back to you.
Okay. Yeah, so what we did, across the board, we had, last time we moved the profit target to 50% for like the bullish pre-runner and bullish runner. So we moved it to 50% across the board, every single strategy. So, the testing, and the bullish pre-runners, I think, did better using that 50% testing, but we're still in the trade only looking for 25. Obviously, you guys can do whatever you want, but we just figured the testing at 50 will narrow down the entry point to the best place, and then we'll just go for 25 on the trades. So that's what the guidance is, and you guys are obviously can do as you please. So, and we also, we moved up the profit factor to 8. We had 90% previously. And so we moved everything up to a profit factor of 8. So, if you want more trades, you're more than welcome to dive into the, this 80% tab. And find, like the 4.6 or something, you can do all that stuff on your own, but, we're trying to narrow it down, keep it manageable, 125 trades total, between all the strategies. So, so that's what we were thinking there. So for this, the vol rise, not much change other than, we're doing a 50%, still doing a strangle, and that's at the upper and lower standard deviation. And, the screening is the same that we had, over the previous quarters. So, the next tab obviously is the 80%, and then, we filter it down to the 90. So, we got 6 trades here, and I've pulled anything that has a conflict with the bullish or bearish pre-runner. So I figure those are stronger than, the vol rise, because we're doing spreads and, getting a credit versus, this is a debit where you're buying, it's really got to move. So here's the, 6 different trades. Obviously, I'm not sure if too many people do this, but they seem pretty strong, and, we can track these, quarter over quarter. I would say, one thing, Shawn went through the bearish pre-runners, this is kind of the first time we're really tracking them with spreads. So, just buyer beware on those. If I were you, I'd just kind of track them, see how they do. There's obviously not a lot of trades with those bearish pre-runners or runners, but, I just think this is the first one we're really tracking it with the spreads, but, it made sense for the bullish pre-runners and bullish runners. So we just figured, if it makes sense for that, then it'll work better on the bearish also. So overall, just 6 trades here. And I think that's it, so all the data is there for you guys to review. The movers. So, we bumped that up to 50% profit target 2. So that really, this hasn't been a good strategy, and we had nothing over 90%, and we only had 8 over 80%. So really, there was no trades that qualified for the movers this quarter. So, we'll keep doing the testing, but if it doesn't meet that, that kind of strict criteria, and I think we've been getting more and more strict about, which ones we want, win over 90 and, strong profit factor. So we didn't have any qualify for the movers, and that's holding it through the earnings, so it's like a vol rise, but you're actually holding it through the earnings. So, that's a very tough trade to win. And, I think, moving the testing how we have really kind of shows that, you probably don't want to be trading it. So we'll see if anything comes up in the future quarters, but, I don't think so. Just nothing's even, getting over that 90%. So that's those 2. So I'll pass it back to Shawn. Anyone have questions on that?
And I just want to make this, Dave, I want to make comment on relative to, I think it was Mark's comment a little bit ago, is that because the strategy isn't paying off this quarter, we are in an anomalous kind of environment still, and doesn't mean that as things kind of normalize to whatever the new normal might be, this particular strategy might get better whenever that happens. So
Right.
I don't give up on the strategy, I just keep watching it.
Yeah, no, we'll keep testing it, but I'm not gonna, it's not discarded. It hasn't won since, hadn't been a winning strategy since we've been tracking it. So, that's a long time. So, that's just for the mover. The vol rise, it seems to do okay. Not spectacular or anything, but, the mover, I think that, and this has been a loser. So, if it meets the criteria, if a trade comes through, we'll push it out. But, until then, I think the new testing is going to be a lot better overall. It seemed to work really well for the bullish pre-runner. So, we're applying that across the board, and I think it'll bear fruit. So, okay. All right, Shawn.
All right, cool. All right, I'll share my screen again. So back into the Google Drive here. I want to show you the non-movers. Josh just showed you the movers. So the non-movers, ones we've talked about this set with the vol crush using that iron butterfly strategy. I am going to, test it again later, like Sudhir mentioned, and some others regarding that double calendar. So trying to use a double calendar trade on some of these, either non-movers or the vol crush list, and see what the testing can produce doing that. But as for now, we just have the iron butterfly stuff. I think it'll help, minimize or possibly reduce some of the risk that we might have on the table using that other strategy. But that's yet to be seen. I got to test it and see what the best route's going to be. So again, I just show under criteria, kind of show you on that one page within Delphian, the earnings calendar. I just show you the setup of how everything's set up. I showed you, I display. I don't know why it's just rolling that one over. Sorry. How's it doing that? Let's see. You can see the screener here. I don't know why it's doing that. So you can see the screener that I use. The price change is less than or equal to the direction. the expected move percentage from the previous day, 1 day after. So you can see the close 1 day after is either direction less than the expected move. So that's essentially what the screener is showing. I'm not sure why I can't scroll over, I apologize. But then we can also see down below this strategy selection that I use to do that. I use the iron butterfly, and the non-mover we've talked about going on the non-mover past that week's expiration to the following week's expiration, and typically, being able to hold the non-mover trade a little bit longer than the vol crush. So the non-mover trade, when I set this trade strategy up, I said exit after 10 days, even though this 10 days isn't really going to be valid, because my option expiration should be expiring within 6 days because they're weekly options. So typically I'm going to get an option. My option is going to expire, 99.9% of the time prior to this 10 days, but I wanted to give the trade some time to work out. So I'm either going to let the trade work out for a couple of days on the non-movers, or it's going to hit my profit target. So similar to what Josh did on some of those other trades by increasing that profit target to 50% to see if we can be a little more selective. And even though we're still searching for, that 25% profit, we're wanting to test at that 50%. I did the same here. I used 30% profit target by max profit, and we've talked about using 15%. So I still want to use 15%, when I'm live trading, but for testing reasons, I did 30% just to see if I can get, my list to be a little more selective. Profit target percentage, 30% of my max profit, stop loss, 400%. I mean, typically I'm not going to hit my stop loss. I know my risk when I get into this trade. So that's essentially 100% stop loss. Days to expire, 6, and I use weekly options. And we can see down below, I'm selling the call and the put right at the money. And then I'm buying one call that's basically one strike above the expected move from the current close. And then I'm buying a put the same, one strike below the expected move from the current close. So you can see kind of cut off here, but I wanted to put the sample there so you could see it. Under the raw data, so I had all of the symbols here under the raw data. You can kind of run through them. I don't know how many were there, but say there's 187. Win over 80%, I had 41. And then what I did was I did win over 80%, a profit factor above 8. And then I had my duplicates removed from my vol crush list. So we can see here I have 13 symbols that came up on this non-mover list. So one that stands out, or two actually, NSC is a higher price stock, Costco is a higher price stock as well, but both of those fit in this non-mover category, and they were not, on my vol crush list. So they're here. So those might be some we want to look at some other strategy, like that double calendar might be good to test it. But here we're looking at 13 different trades for this non-mover list. I don't think there's anything there for this non-mover. So for the vol crush, so a similar setup on the vol crush once it loads up. So you can come in here and you can see the actual screener that was used. And then you can see this screener within the calendar. So at the money IV 1 day after is basically going to be greater than negative 30%. So more than negative, the change has to be more than 30%, negative 30%, a drop in volatility, more than 30%, 7 out of the 10 earnings. And we can see the strategy that I used is similar to the strategy on the non-mover, except here I'm exiting 1 day after. So right after the earnings announcement, I'm getting out of this trade. So, with testing and using the virtual portfolio, the most optimal time to get out of these vol crush trades is the very next day. Unless the stock moves way outside of the expected move and you're at a max loss at that point in time, really you can only make some money back if the stock comes back. But testing wise, getting out the very next day is really what that vol crush trade is about. So that's what I used when I tested it in here. I used the 30% profit target, but since we're getting out the very next day, typically that's not going to be, a factor. Same thing with the stop loss. And then I'm also using days to expiration, 6 days, and then I'm using the weekly options. And we can see the strike selection model is the same as we did on the non-movers. My raw data is roughly 134 trades, win over 80%. We have 22. and then a win over 80% with a profit factor of 8, and then the duplicates removed from the non-mover list, we have a total of 7. So, you know, Josh kind of mentioned it earlier too. If you know that there's a stock not in this list of the non-mover or the vol crush that you typically like to trade, and you think it works really well for you, you can always look at the win over 80% list, or you can even come to the raw data list and look in there, and you might see it in there. And then without you testing it yourself, you can kind of get some of the results by looking at, like, Amazon. You know, how did Amazon perform? 70%, you know, with a low profit factor, 1.8 profit factor. So you can kind of get a pretty quick idea by, you know, seeing if your symbols on this list, you know, if you don't see it on the actual vol crush list that we have put out. So yeah, 7 there. So that's pretty good. Any questions on those two before I skip over to the runners?
This is Dave. I got a question for the group. Did anybody use either of these strategies on Apple last night over the kind of like, it's not an earnings event, but it was a, you know, it was a event day, marketing day for Apple, and I just wondered if anybody else thought about using the same strategy. The IBs dropped over 2 points from yesterday, so.
I didn't. I didn't. I was just a kind of a miss of the news, so I didn't see it coming about. But I think, like you say, if you can use a comparative IV from what their IV typically is to what it is, you know, the day before that event, I mean, that's a good reason to test a strategy like that, right? Is when you see that, you want to be a seller right when those IVs are high. So that seems fair. But I didn't see that was happening, so I didn't.
Well, I have one that's still. I have the one that's still working. Maybe I'll put that up and share how good or bad it works out, or give it to you guys and we can talk about it before the next meeting. But you know, like, so that's a high volatility event day is earnings date is like yesterday for Apple, is also like in a biotech for the date of the FDA approval of a clinical trial is also one of those high volatility dates that the vol crushes might work well, or the pre-runners probably won't work well also for those specific industry groups. Just saying.
Right. Yeah, I mean, that's a good idea. You know, and those are things that are definitely fruitful to explore, is figuring out those days that are typically, you know, high IV, that an event's happening if it's kind of a predictable event. And then you can trade based on that, right? Being a net seller if the IV is really high, or a buyer if the IV is low, or whatever the case may be, depending on the particular, you know, setup. So
yeah, the Apple trade was specifically caught my interest because it's setting up for right about today. We want to maybe get into the pre-runner strategy for Apple as well. So that's why I thought the fall, and it's only the one time a year that this works for Apple, because that's when they're usually September is when their big marketing day is for all new things Apple, and you know, a lot of hype around that. So, you know, interesting. I just thought it was an interesting thing to trade.
Yeah, it gives us a heads up of how it works, and we can share it next week, or you know, at one of the meetings. That's cool. All right, so on to the runners then. So the bullish runners and the bearish runners. So bullish runners, again, we can see with the raw data, we can see all of the raw data here, and we can see the screener that was used to set that up for the bullish runners. Close 20 days after is going to be greater than 3%, 7 of 10 earnings, and you can see the trade strategy selection down below with the strike selection. So a bull put, again, getting into it the day after earnings, and then getting out, you know, at most 20 days after the earnings announcement. Looking for the profit target of 50% within this setup. But again, we're looking to collect the 25%, but we tested at 50% to see if we could be a little bit more selective and get some of those stocks that typically are most profitable or most probable. Stop loss 100% again, days to expire, 60 days or minimum to expire using monthly options. And you can see it's a bull put. So we're selling the put one strike below the current price, and we're buying the put one strike above the lower standard deviation. So a similar setup to the bullish pre-runners. We can see with the win over 80%, the list that we have here, a decent amount. I don't know how many it goes, but quite a bit. And then under best trades, you can see that there's a total of 20 trades listed for this particular setup for the bullish runners. And then again, win percentage over 90, profit factor over 8, and then a conflict with the bearish runners where any conflicts were removed. So if we go to the bearish runners, we can see it's going to be a similar setup to the bearish pre-runners. So you'll see here the screener that was used was the close 20 days after less than -3%, and it's going to be 7 out of 10. And you can see the bear call spread here, similar setup to like we did on the bearish pre-runners, excuse me. And then looking at the best trades, taking a win percentage over 90, profit factor over 8, and the conflicts for the bullish runners removed, we have a total of 6 trades here. So 6 trades within this bearish runner strategy. I believe you had 2 separate sets up there, right, Josh? You had the bear call, and then it looked like you also had one below. I'm getting kind of mad. It's blocking me out for some reason. You did it as a bear put as well, right? A bear call and a bear put, okay. And those symbols are, some symbols are similar, right? I think.
Yeah, they're pretty close. I think like 4
Pretty
of them,
close.
4 of them matched, I think, 4 or 5.
So then why would you choose one strategy over the other? Just personal preference at that point?
Well, I think the bear call, you're gonna have a little higher break even than the bear
A
put.
break even's higher on the, okay.
Yeah.
So like Josh mentioned.
What is the alert going to alert you to?
The bear
That's a
call.
good question, Josh. The bear call.
Bear call?
Yeah.
Okay.
Yeah, I was just testing both because I wasn't sure which one to do, and then it was kind of inconclusive, based off the testing. Some of the profit factors on the bear call were a little higher than the bear put, but I just kind of make the judgment like, okay, well, the bear call, you're going to have a higher break even, so it'll give you a better chance to win. So that's why I went with the bear call.
Yeah, and it's more consistent with the bearish pre-runner too. So yeah, and yeah, the bear call probably makes more sense.
Yeah, that's what I went with. So.
And I think that's a good analysis too when you have a lot of strategies that are similar. I think if you can find some differences, like in that instance with the break even, if your break even is higher, or if your break even is better in one instance versus the other, that's a good point to focus on. So yeah, so that's all for those. So again, like Josh said, he shared that file with everyone, so everyone should have that file. What I want to make sure is that, on these files, we have the screener, we have the trading strategy set up. So just so everybody knows, you can always go into, your Delphian platform. You can go into your earnings calendar, and any of the information like that you want to try to recreate or duplicate or analyze a little more in detail yourself, this is where you would go to actually input that data in and see if you could kind of make some adjustments that might match your own, investment style. So you could use the certain days. We used 120, or I used 120, so I could capture the entire quarter. I changed the liquid options list. You can change it to 2 legs or 4 legs, depending on which type of trading strategy you're going to use. You can change this screener. So we, showed you the screener that we used when we developed it, and then obviously the strategy below as well. So when you do that, you can come up with this different analysis and find out some of these specifics in the actual trades as well. If you want to look at that. So this is where you would go to kind of replicate some of that data, in your time. So, and then, yeah, like Josh said, he shared it with everyone, so you should have it. No need to go in there and select, alert notification. The alert notification should automatically come to you. And I think that's it. So any questions?
Looks good.
Cool. And then, yeah, real quick too, I just did want to show you, this is what I just put together right before the call. Yellow here is the total number of trades for Q2 2021. We had 110. And then for Q3 2021, we have 125. So, you know, we got 15 more trades. You know, doesn't mean they're all going to be confirmed, obviously. We have more bullish pre-runners from last quarter. The top number are the numbers that were confirmed. This number is the number that was estimated at time, but I added them up to kind of show you. So a couple more bearish pre-runners. Vol rise dropped a bit. Vol crush pretty the same. Movers, 0 trades like Josh showed, so that did drop. Non-movers dropped 2 trades. Bullish runners increased a little bit, and our bearish runners are the same. So you kind of see the differences between, you know, where we lost or gained some trades based on the different strategy. I'm not sure if there's any, you know, takeaway from that or not, but I just wanted to show you guys the difference in the total. So not a huge difference, increased a little bit, but that might be more applicable to the actual strategies changing. And like Sadir mentioned, I think that's going to, I think that should help our trading a little bit, hopefully. So.
What was the percentage last quarter? You don't have a total over in column J for the ones that were actually confirmed.
Say that again.
Of the 110, how many were actually confirmed earnings?
That were confirmed. Well, some of these are, you know, like vol crush and things like that are going to be confirmed because of the day after, right?
Right.
Or the day of. But 68. So 68 we traded, right, versus 110. So what was that, just shy of 50%? I mean, a little bit.
Yeah, and I think that's just the nature of the beast. You know, that some people just don't confirm their earnings.
Right, and you know, we've talked about it with Joe and the group and Josh, you know, and myself. I mean, we've worked with multiple other, you know, data providers looking at their earnings data that they're providing to, you know, some of the really big companies that are in the industry, and really the data that they're providing to those guys versus the data we're currently receiving, you know, there's really not much of a difference. I mean, the difference in a confirmed versus an unconfirmed, it just seems like, you know, like you mentioned it here, they're not required to do it. They don't have to do it. So it's almost like if Amazon tells you when the earnings is going to be, it's almost just like a good faith gesture. They're giving that information out so that they look better, you know, in the eye of the industry and in the eye of investors, right? But they're not, you know, as I showed that email before, you know, the SEC is not requiring them, you know, there's no law requiring them to put those dates out. So they don't have to do it. And there's a lot of companies that just don't do it. So, you know, we tried to find a better source to see if we could get, you know, a more accurate source, but as of right now, it seems like our source is one of the accurate ones. So there's not much change we can make there, and that's just going to be the nature of, you know, the way these trades come about.
Yeah.
But yeah, so a little bit of an increase, but you know, like I said, I'm excited for those new strategies, the bull puts and the bear calls. I think those are some really great trade designs, and using them this way, I think, you know, will be good. So yeah, so please let us know how you do with them, and if you have any questions, let us know. So thanks, guys.
Oh, thanks, Shawn. Appreciate the presentation. You know, thank you all for your feedback. Yeah, as you know, we're just kind of trying to do this continual improvement on these, and I think we've made a step forward, you know, the past 2 quarters, and we'll just keep trying to do that, and you know, keep the feedback coming. On that, thank you all for attending.
Thank you.
Thank
Good
you.
meeting.
Yeah, thanks. Great presentation.